Ace bringing in the heat this morning. Guys, Mark 115. Could someone let me know the passage to I can't believe that I'm not familiar with Mark 115. I want to know it. I want to be familiar with it for sure. Good day and may God bless you all for sure as we get going over here. A lot of people asking a lot of questions. Some of those are about what's going on here with the rise of the 2 and 10 year, and is it signaling an intimate recession? So let's just start here because it's going to be interwoven into our whole session today as we talk about what's going on with the shift of the Fed likely into permanent monetization of the debt. Powell told you by April they're going to begin to taper those purchases. Do you remember when Janet Yellen told us in 2024 that the Fed buybacks were then going to subside and be used less than less going forward? And then do you remember how they've been used in the last 12 months more than ever and will continue to be? Now that's like a little bit of that was one of the steps towards yield control curve, right? We don't have full-blown yield control curve going on right now. Powell just took another step as he said, "Oh, from now on we're going to do these RPM, reserve purchases management." What is that? Well, it's QE. Well, no, Jordan, it's not QE because QE obviously means that rates need to be at or near the zero bound and they're buying long duration. Powell said they're not going to buy anything more than 3-year paper. So that's not QE. It is printing of reserves, and it is going ahead and giving those reserves out to the banks to lend out and create money all out of thin air. However, here we go. The time is fulfilled and the kingdom of God is at hand. Repent and believe in the gospels. Man, Mark, what a way to open up your gospel. That's beautiful. What's going on over here as we continue to see the sharp rise out of the 210, and a lot of people wondering, does that signal an imminent crisis, an imminent recession? We know that we just went on one of the longest periods of an inverted yield curve, and it lasted quite a long time over here. I think I could be wrong, but I don't think so. But I could be. When was the longest previous one? Was that right before the 1940s and the last time we saw fiscal dominance? It could be. I'm not sure about that. And then coming out of it, after the yield curve had uninverted, this has been the longest uninversion of the yield curve without a crisis developing. Well, what's going on? Well, we know what's going on. This time is the same as it's been the last time it was like this, but it's different as far as our lifetimes in so much as that, well, fiscal dominance is definitely a force that is running the markets. Now, the Fed is going ahead and they're like, okay, well, don't call it QE because it's on the short end. But what they're trying to do is control the short end over here. And as that's happening, we see a couple of things happening. We see, first of all, the bond market. I want to jump over to the RSI on Bitcoin over here as well, just so we get some fresh eyes on it. The bond market, ever since the 10-year, ever since the Fed cut rates, is like, I think we're going to see some inflationary pressures coming into 2026. I think that the Fed is doing everything it can to go ahead and now turn it towards monetary policy aligning towards running it hot. And this is going to have guys, I don't think so. My own personal belief is that because of shelter, which is going to continue to muddle down this way, that it's going to provide some cover for these inflationary forces that are rising elsewhere. We know that energy, as far as crude, is doing a good job of providing cover, but we also know that people's utilities are screaming upwards, largely attributed to these data center buildouts. Thank you, Zuckerberg. So here we have the 10-year rising, showing, you know what? I think that this pivot here by the Fed is actually going to cause inflationary pressure. And then we see something like, well, the short end of the curve, that's going to be controlled here, as the Fed is going to be in there bidding, everything up to 3 years. So is it because of, and why is this all happening? So that the government can continue, so that the Fed is going to be monetizing the debt of the government. Government's not stopping spending. Fed has come in and they're like, all right, we're going to make sure we're there. We're going to be buying the paper. As we all know, that we've gone from, ever since Janet Yellen took over the Treasury, from rolling over all of this short-term debt. U.S. has another $9 trillion of debt it needs to raise in 2026. I was surprised they were able to do it in 2025. Here we are now in December, they have, except now what we're seeing is that the Fed is going to be there, and the Fed is going to be there to monetize it. So do I think that this signals that and don't forget, you could just come back over here to late 2024, and people are like, oh, the 3-month countdown, because on average, 3 months after the uninversion of the yield control, there is a recession, and it has not yet materialized. Do I think that, as someone who likes to do just draw lines on things, if we come towards the top part over here, this double touch, that will be an area that I'll be watching. But every other time it's touched the top end, we've we've seen equity markets here continue to run up. So I'm not sure that will be a warning sign either. Is this a new regime that we are in? Well, yeah, in many aspects it is. Don't forget, I'm the guy who's like, listen, ultimately, all of this is likely going to lead to larger inflation going forward, and at a time that growth is slowing. And I think a lot of people are going to get the read wrong on that. I think a lot of people that are able to see the future, they think that it's going to happen like instantly, and these things generally take a little bit longer to play out. Will inflation become a narrative in 2026? I don't think so. I think what's going to happen in 2026 is that, again, we're going to see shelter providing a bit of cover. There's many variables ahead that we have to navigate, including like the midterm elections. But I think that as we move closer to 2027, there's going to come a point in time where all of that trying to engineer growth is then going to be slowing down, and it's going to be hitting a wall of rising inflation. And that is going to be bad news bears. This particular moment that we're in, I love to draw lines on things. This particular moment we're in is the reason why I've said that the cycle high for Bitcoin is going to come closer to 2028 having than the 2024. Always around the time that the Fed was pivoting from ultra tight monetary policy, stopping QT, lowering rates, stopping QT, and now raising the balance sheet. That is I've always deemed one of the most difficult portions of the cycle to navigate. We're in the heart of it right now. It's not over yet. We're looking at the Bank of Japan this Friday, Thursday night into Friday in Asia, coming out, and they're expected to raise rates. A lot of people are bracing for impact on what that could do to potentially setting up a risk-off environment. Obviously, Bitcoin generally in those type of environments does not respond well. However, Bitcoin has hit a major pullback prior to the Bank of Japan raising rates. So we will see. No. Do we think that all equities will skyrocket? Well, listen, this is not outright QE. And if you go back to the beginning of the session, we did cover the difference between what outright QE is, and that is when rates are near the zero bound. Ben Bernanke said the only way that QE works is when rates are near zero, and then they're buying long duration bonds. Right now, obviously the Fed funds rate is elevated. It's not near zero. And yes, they are printing reserves, but they're going ahead and they're buying the T-bills with it up to 3 years instead of bonds. Is it still QE? Absolutely. They're monetizing debt. Is there a nuance? Is this uber asset inflationary? Well, the last time this happened, risk responded very well. And the last time was right over here. This is what they called organic balance sheet expansion. They got the same program running right now, except they're calling it reserve management purchases. And last time we saw tech respond very quickly. Now, are there narrative overhangs right now in tech? Are we going through like a mid-cycle concern as we've seen a new development where now we're seeing these AI scalers moving towards actually borrowing money in order to go ahead and do their build out? Listen, at the end of the day, only the strong will survive. Will there be any casualties? Could be. Is Oracle potentially one that right now their corporate bonds are being priced closer to junk, and the market saying, well, there's a lot of risk going on over here? Yeah. Is Warren Buffett, the value investor, buying Oracle? Is he buying Google? And he is buying Google. He just bought Google right now. There's going to be winners. Remember the railroads. And remember how many booms and busts there was along the way, and it was all just one giant boom. Are we going to see something like the government have to come in and backstop? More than likely, that is what will happen in 2026. Will the government be taking a piece of that equity in the companies that it backstops? It seems to be a trend that's going on here with this administration. So I wouldn't be surprised if that were to happen. A lot of these companies are very insistent on the need. Look, you could look at what happened to Blockbuster, right? Blockbuster, I don't know, some of you probably don't even know what Blockbuster Video was. They were these retail stores that rented videos to people, and its name was Blockbuster, and it was a blockbuster. Like, everybody was at Blockbuster all the time. And they had the opportunity to buy Netflix. They were like, streaming? What is this business? No way. A couple of times they had an opportunity to buy Netflix. They never went ahead with it. And no longer is Blockbuster here, and Netflix is sure is. Now, why am I talking about, what we're talking about is a transformation in tech, and those that are not able to go ahead and to pivot along with what's taking place. And it looks like the likes of Google's co-founder, coming back off his yacht to get to work and build. You're looking at Zuckerberg, you're looking at Microsoft, and none of these guys want to get left behind on the curve, because if they do, they will become irrelevant in the future. So people might be like, they're spending $100 billion and there's no ROI on it. Well, the ROI is going to be 10 years from now when they're making, what was it? YouTube was bought for $1.2 billion and now makes like 7 billion. Is it a year or a quarter? I don't even know, but that's whatever, either which way, it doesn't matter. Blockbuster Friday night. So last time this happened, though, yes, tech off the gate began to rise very quickly, and Bitcoin didn't. Bitcoin took, two lower lows. It took out, Bitcoin's initial spike over here, and then it made two lower lows before finding its footing, and likely would have found its footing if they didn't lock down the globe, because they needed to inject a bunch of money. And anyway, that's my expectations about what likely happens this time, is that we talk about that, funds flow into assets depending on where they are on the risk curve. And regardless of what your feelings of Bitcoin are, you have these gigantic tech companies that are earning tens of billions of dollars. In the case of something like Nvidia, what was their last quarter? $60 billion. I mean, yeah, so it makes sense that you would see money flow into assets depending on where they are on the risk curve. And even though you might believe that Bitcoin's going to a million and it's not stopping there, that's not where money will be allocated first. And likely tech does find its footing first, and then soon thereafter, last time it took several weeks, you could find that Bitcoin is able to find its footing. And I think that's probably a good roadmap to have for as far as expectations. As far as expectations, let's take a look over here at what others' expectations are. And that is, this is Real Vision, Julian Bittel, and he's talking about, listen, the last time Bitcoin's 14-day RSI was oversold below 30, and the last 5 times that that's happened, which by the way have all occurred in a bull market, the last 5 times it happened, we saw would be the path, the average path following it. And he points to 170,000 Bitcoin within 3 months from now. Now, which may or may not happen, but I think it's important for you then not to look at what has happened every time that the RSI was oversold in a bull market. But what did that look like in a bear market? And so here we have it bottoming at the end of the bear market. Is that maybe similar to where we are right now? Could be. Right here we have the portions of, I'm sorry, I'm on the 3-day. That's not going to work. Let me start that over. Thank you for allowing me to have a bit of a mess up over there. And we can start over here. And this is the summer, leading into the summer. This is where Elon in the spring jumped into the water and muddled everything. I blame Elon for that 50% drawdown on Bitcoin. And then we were like, listen, but we were in July in that descending wedge. Like, all right, we're going to see Bitcoin make a new all-time high by October. Sure enough, it did. Is that the situation we're in? Are we looking at a descending wedge? No, we're not looking at a descending wedge this time, right? That does not look the same. Are we looking at more of a bear flag? Well, we are in a downtrend, and that continues to be a bear flag. And unless this is invalidated by getting above this green line over here, it's not looking good for what the near-term projections of Bitcoin are. And there you have just a simple buy impulse. So clearing above here, 96,000, $9,000 away, that does become a very bullish outcome for what our expectations would be going forward. But right now, we are in a downtrend, and we're setting up for a potential bearish continuation pattern. So uh, there's that. So the difference between a different time of cycle that Bitcoin was oversold on the RSI. In a bear market, this looks similar to what a lot of people are looking at. And by the way, I'm going to tie this in right now to the theme, or just in a moment, about the shift to permanent monetization by the Fed that is taking place right now. Powell said they're going to taper it in April. Powell's out in May. How about them guys? How about them apples? Powell's like, listen, this wow, what a tenure I've had. I messed everything up the whole way. The whole way I've messed everything up. What are you talking about? Well, remember he told you inflation was transitory, and then it turned out it wasn't so transitory, so they had to embark upon the sharpest rate hiking cycle in history. And then what happened? Oh, wait, too late, Powell? Is that what President Trump calls him? Why does he call him too late? Well, the Fed right now has been lowering rates. Why? Because the job market is absolutely in need of lowering rates. Was he late to see? Well, we all saw it ahead of him, Powell. And now he's like, listen, I'm out in May, so I'm going to give myself some cover, and I'm going to run the printers, to a tune of $40 billion a month. I'm making sure that I get out of here alive. And then are they going to taper purchases starting in May? projections do suggest that what they're going to be looking to do over here is, I want to look at the data with you, but here we got some projections. You can see this ramping up all the way through Powell leaving. And then this is their taper. And then what do you think happens after that? What do you think? Do you think that they're going to wind down this program? Or do you think that just like when Janet told us, oh no, the Treasury buybacks, we're backing off those things. Within months, they increase them more than ever. Is that likely what we're going to see with this program right now as the US debt continues to spiral the wrong way, out of control, and they have no choice but to go ahead and monetize the debt? That is fiscal dominance, and people are still using the same old playbooks they used before. We're going to get into that in a second, but first I want to come back over here and take a look at what's going on in Bitcoin. And you can see in a bear market, I don't think we crossed below here in December, but we might have. This pattern over here, sharp move down, and then you could see this elongated bear flag, right? There was for sure hope over here. Markets right ahead. And then that was right after actually the Fed began their rate hiking cycle in March, taking out the structural low, leg down, bearish continuation pattern, leg down, and then ultimately and later. But point is, look how many Julian showed us every time the RSI was oversold below 30 in a bull market. And the worry is, and I don't know what happens next, is in a bear market, every time you get oversold, that sets up the bear flag, right? The bearish continuation pattern every time. So you start over here, bear flag, take out the structure, next leg down. Here we go, oversold again. Take out the bearish continuation pattern, set it up again, take it out, oversold, bearish continuation pattern, take out the structure, oversold. This one lasted a while, didn't really until it's set up later over here into this one, but each and every time. So if I'm looking at this objectively, I'm saying, well, when I look at the macro, so I don't know if this goes more like this or like this. So I just want to check the difference of what's going on throughout the history. So I'm looking left over here. This is off the low. And I see the first resistance after the intern leak over there. I'm going up a little higher. And I can see from right there. Right, so they're both there. I don't like when I get so dirty. But I'm going to get a little dirty right now. And yeah, because we're very close. So break here, and that's for sure looking like leg down. And when we look at the macro and we say, well, hey, the Fed just started their QE that they're not calling QE, but they're printing reserves and they're giving them out to banks anyway. And they're definitely controlling the short end of the curve over here. And you could see it. And let me just jump over here and just scroll down to the 2-year. And you can even see here today, the 2 years are bid. Yeah. Bid everything else. We saw that expressed in the 2s and 10s over here. And for sure, the long end is rising and the short end is being suppressed. That's likely going to continue. This is why. So looking at the macro, as the Bank of Japan is getting ready here to tighten monetary policy, that likely is going to put pressure out on risk. Our expectations are, listen, the Fed is just beginning to address the lack of liquidity out there. Yes, looking forward and over the next couple of months, I expect to see that monetary base total is begin rising. There we go. That monetary, but right now, that's not where we are. We're in that portion of the cycle that has led me to say, I believe the cycle high comes closer to 2028 having than the 2024 because it could get messy in between. And right now we're in that messy situation. So because the RSI is oversold, I'm not ready to say that, oh, my expectations are that it's getting ready to bounce here and that we're not going to put in a lower low. For sure, we could put in a lower low, right? Again, last time we were here, 2019, September 2019, the Fed begins printing money, raising their balance sheet. It took Bitcoin several weeks and it took two lower lows in order for it to go ahead and put in its low and then start lifting. I would like to see, and I'm looking and I'll find it. I would like to see tech be able to stabilize first. And we're watching tech over here and we're seeing, and again, everyone's aware of the coming move by the Bank of Japan on Friday. So it begs to differ whether or not this is a black swan everyone saw coming or this is mostly priced in right over here. But over the next several weeks, and for tech likely sooner, we should stabilize. We should see this reserve management purchases that are being put in come out and go ahead and have an effect on risk. That is the expectations without a doubt. We got a lot of data today, so I'm just saying don't get comfortable when it comes to just because people are putting out like the last time in a bull market under different conditions that the RSI was oversold. We saw a massive move up on Bitcoin. Okay, well, in bear markets, that's not really what happens. Well, Jordan, you're saying that the cycle high is going to be a lot closer to 2028. Yep, but what happens in between? And we're in the between moment right this minute. That gets messy, and it's why I've always said, and I've always included that nuance. So last time we were here, Bitcoin did make two lower lows. I wouldn't be surprised if that happens again. Doesn't mean it has to. And we're watching. We know our levels very clearly about what needs to happen in order to have a buy impulse enter the market and take the opportunity here. And that major resistance we've looked at in the past few weeks, why this, before breaking it, why this one is so important. And we circled the two events over there. Get above that, and then you could, all right, yeah, now you're going to see a lot of people that flip bearish, flipping back bullish. That's fine. I did see circles bouncing. I see Destiny 100. By the way, our positionings over here remain short on Ethereum, going short, flipping short, I should say, after stopping out long, and then Cardano continuing to hold it short over here. Bitcoin bull runs remains sidelined since $113,000, and Tesla is holding this open position, the only open position for equities that we have right now, and it continues to hold here 8% into profit. I saw that we were looking at Circle here outperforming, and I also saw that Destiny Tech 100, this was pouncing off of the news that Elon plans on taking SpaceX public in 2026. A lot of people probably think that IPO would be way overvalued. It would be the most highly priced IPO in history. Nevertheless, I don't. Are is anyone looking to buy the SpaceX IPO, or do you think that it is undervalued? Probably the greatest financial mistake that I've ever made was selling the Google IPO and the Facebook IPO in the year after and not just holding them up until today. Boom, 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 boom. Just circle bouncing here. Look at it. The circle's into resistance. Check that out. So we definitely peaked above, right? Broke down below, and we're into it right now. Yeah, we're not out of the water yet. For some reason, though, Circle is definitely bid and leading the markets today. CoreWeave getting wrecked. And then, but Oracle's also bouncing today. Did Oracle close the gap completely? Not yet. Yeah, I don't know what to make of Circle outperforming today, but I think this is a potential opportunity here on the breakout and retest now underway. I think in 2026, this will become much more of a story, the SpaceX IPO. And the other thing you got going on over here is the OpenAI. Is OpenAI a weak link, or is OpenAI have such network effects with the amount of users they've onboarded that it's almost different, right? You have the Facebook over here and you have OpenAI here. And the Facebook has all of these users, but they don't have a top frontier model. And then OpenAI, they don't have the users. They're getting them. They're what up to 1 billion users, almost 1 billion users. It's unheard of growth, but they do have a frontier model. And you could see Meta's like, I'm glad I have the users, but I want a frontier model. So they're both want what the other doesn't have. Hey, maybe Meta should just buy OpenAI. How about them apples? Yeah. Hey, listen, that's great. Get on you, Michelle, because a lot of people, some of you, Depower, I know you bought the IPO. And a lot of the crowd wanted Circle all the way up here as it was absolutely defying gravity. Yeah, a lot of people looking for a relief rally. A lot of people will believe that we get a relief rally. It will be opening up in a bear. I would say watch what happens. Um, right? If you don't take out this resistance that I'm highlighting up here, and if you're new here, that resistance is so important because it was the shakeout of the spot ETF launch. It was the Japanese yen unwind, and we've broken below that. I know that we haven't taken out the April low yet, but that's a lower low for structure. So that's concerning for me. It's very concerning for me. And then you're setting up, we looked at what the RSI becoming oversold in a bear market looks like, and how that often leads to further downside extension. So here we set up this is ultimately here a break above 83, so upward sloping of what sets up that oversold RSI, the consolidation, and then the bearish continuation. So if that happens first, another leg down. That would not be surprising in so much as last time we were here, Fed cycle, Fed started raising the balance sheet. Took a little while for that liquidity to spread out into the system. And liquidity right now has not yet done that, even though the Fed has already purchased $16 billion. You can see overnight spikes in the repo market continuing. The liquidity yet is not yet towards or back towards ample. However, if we break above here and the buy impulse breaks above here, then likely, no, this is not setting up for a continuation further to the downside. That likely over there. And again, let me just come back and show you the last time you were in a similar situation. A lot of people believe you're here in this, what I'm highlighting in this one. The beginning of the bear, right? You could even, I don't think many people think we're here yet. Remember 53,140? Was the first de-risk that we called out way up over here in 2021, way ahead of the field. There's no question. And then you saw this little bear flag develop, and that set in a big, big move down. I think a lot of people think that we're here right now, and we are potentially, maybe it's already happened, giving people that are looking to go ahead and get out their last opportunity. But notice that this particular time, you never broke above the structural resistance. And if you do break above the structural resistance, then I would say that the momentum favors that's not like where you are in that bear market, in that complacency, that move of hope. Now, if you break down, I expect obviously further leg down. Again, that's just simply where we were last cycle as well, as far as the Fed cycle. So I think that a lot of people think that this is the opportunity, and maybe it already passed 95,000. This is where Luke Roman says that. And guess what? That was a great trade for Luke Roman. Luke Roman buying in at 30,000 and selling at 95, a 3x on Luke Roman. That the investments that he makes, he's never seen returns anything remotely like that. I think for him, that's a great trade. We'll find out, you know, how, whether or not the macro skills are there. That this will be talked about in the months ahead for sure. Um, yeah, so it remain you have to follow the PA. The Fed cycle here is hinting towards they're moving towards easing. They're there to provide support, and risk likely is going to run with it. And a lot of people, because of 4-year cycle, Luke among them, Luke pointed out, like, listen, Bitcoin every 4 years goes down. I had a note on my computer in September, and sure enough, 90, I sold. 4-year cycle, or are you looking at the macro, right? I'm looking at the macro. I'm looking at the Fed cycle. I don't see it. Now we could elaborate on that a little bit, which I would like to do with you. So let me move over to a different slide, and I'm looking and I'm trying to find it. And I don't know what's going on over here. There we go. Let's cover this a little bit together. By the way, today we had obviously non-farm payroll. Finally, core retail sales pretty good. And we did see the first of all average hourly earnings, probably a lot of part-time work, down significantly, but we did see the unemployment rate rising to 4.6. So this data today, right here in December, is not enough to get the Fed to change their current trajectory of being concerned about the job market. And nothing changed at all, though, as far as after that data, expectations for the end of January meeting. I wonder about March. Let's check over here. And so a little bit, not much, so not really much at all. I wanted to look really quick with you at what's something that we've been watching that was a deterioration in the hard data. Lately, over the last couple of months, we've seen a deterioration in the soft data, but not in the hard data, right? We look at this because in the past, this has been a signal of leading in towards a recession. We're not seeing that right now. Let's look at this from Zero Hedge, and the Fed Treasury merger is underway. The market will never again signal that the government is spending too much. So now you're getting fiscal dominance with a cover of a Fed who's monetizing that debt. And don't forget, there will be a new Fed chairman coming shortly in May. And at that point, you have to wonder, will that new Fed chair take on the posture of, well, I was just playing with Trump and I don't really care what he has to say. And the Fed is independent and we're going to do our own thing. Or will he indeed be basically working under Treasury Secretary Bessent, and whatever they say is he going to do? And they talk about, well, the Fed Treasury merger. Well, for most of history, actually, the Fed and Treasury work together. It's only in modern times that we've seen a political sizing of the two. Let's go ahead and just take a look at a couple of things. So, number one, bump it up. You can forget the market signaling as the headline that the government is spending more than it could absorb. So now you're seeing fiscal dominance with a cover. This, dear readers, is the first official step towards yield control curve and is precisely what is causing soaring gold and silver as they are sniffing it out. Again, this is on the short end. The short end is what they're using to roll over all the debt. Is it going to become at any point in time the 10-year? Is that going to cause 10-year spiking above 10%? Or at 6%, 6.5%? I think it gets a lot higher than 5% ultimately. One further note, there was no votes about this bill buying turn coming out of the December FOMC meeting. It was a unilateral decision. Perhaps the FOMC minutes in a few weeks will give us a sense on whether or not it was unanimous or whether or not there was some dissent about the Fed beginning to monetize the debt in a new way. Once Hassett is confirmed, if Hassett is confirmed, Bessent will be his boss. A direct reporting line, day-to-day communication. By the way, Powell and Bessent have lunch once a week, so there's a lot of communication going on. The Fed and Treasury balance sheets are essentially one, and Bessent will have his say, especially because he managed the selection process and got Hassan over the finish line. Who are you betting on Polymarket? Polymarket has the two leaders just under 50% probability that they will go ahead and take the reins, or is it going to be an outlier? There's something I want to share with you, so I'm going to come down to it and get to it. The silver lining is that with this coming boost from fiscal policy, any downturn will be limited. The cycle high will be closer to 2028 halving than the 2024. But the inflation story takes hold later in 2026 or 2027 or sometime thereafter. And this is something that I've been telegraphing over the last few months about my expectations. A lot of people worried about the bear market. I'm like, no, we're gonna reaccelerate. And then the problem becomes when that reacceleration runs into a wall and slows down, and that wall is going to be a wall of inflation as well. That's when I get concerned and worried. And when I do get concerned and worried, don't take that lightly. The great disruption is coming to the Fed and banking. Boom. Here we are. Thanks for being here, Sawyer. That's pretty awesome. All right, y'all. Bank of Japan on deck. Ahead of the Bank of Japan Thursday, we get CPI. Find out whether or not we're starting to see inflation continuing to be ticking up or not, right? Obviously, crude continues to provide some cover there. Shelter is going to become the story in 2026, providing more cover. We have unemployment claims, and then we move towards the main event of not only the week, of the rest of the year. Obviously, the Fed beginning, we'll call it QE, which is what it is. They're monetizing the debt. They're doing it at an elevated clip, $40 billion a month. Powell says that's only through his tenure. As soon as he's stepping down, they're going to go ahead and peel off. But as far as how much they're peeling off, it's not really a big deal, right? You could see that going down from, well, they're starting at 40 billion. I'm sorry. That's like 37 billion. And then to provide Powell cover the first quarter, they're raising it. And then they're coming back towards that level, which is $38 billion a month. Come on, guys. These guys are jokers. It's like usually like around, and it's completely variable, but around, let's say 12:30 New York time on Thursday. All right, everyone. God bless you. Thanks for being here on this Taco Tuesday. If you didn't already, please on your way out, do hit the thumbs up, do hit the like button. I think for sure we definitely earned that. Have a beautiful day, everyone. I'll see you soon.